Good morning, good afternoon, good evening, whenever you happen to be watching this video. My name is Matt Hensley. I am founder and head trader at ProTraderDesk.com. And this short course is going to teach you the very basics of how I trade the StackTrade system. Now, I've been a full-time trader for approximately 15 years, a little bit under as I record this. And I've been a full-time futures trader for the last 7. Over the past 3 years, however, about 75% of my trades have come in this particular system. So we're just going to go over a high-level knowledge of the system. And if you want more information, I highly encourage you to check us out at ProTraderDesk.com. So guys, one of the biggest misconceptions in trading is when we first get into trading, right? And you're all probably guilty of this. I was guilty of this, especially as a day trader. When decisions need to be made very quickly and on short time frames, we tend to almost oversimplify our entries, right? As a trader, and the more you trade, you will find out that about 95% of the work of a trade, the work that goes into every piece of the trade, is done before the actual entry. The only piece that remains is the journaling. So when we're trading StackTrade, we have setups and we have non-setups. We do not trade anything in this system unless it is a confirmed and valid setup, and we'll be going over those a little later in the course. But guys, trading is a workflow. Okay, think about any job you've had. If you've had an office job where you're something like data entry, or if you're my age, sort of in the 40s and younger, at some point you've probably been flipping burgers at wherever, right? Think about even making that burger, right? There's a workflow to that. You put the burger on the grill, maybe there's some onions there, and then you build the actual burger, you wrap it or put it on a plate, whatever, and then it's served. There's a workflow to that. Trading is no different. Trading is unlike almost any other job and career in terms of the time spent to the rewards and how much it can change your life. But in this regard, it is exactly like every other job that has a workflow. There's a certain set of steps that we take, a path that we go down that leads us into a trade. And at that point, we're kind of at the mercy of the markets, and all we can do is put the probabilities on our side with our entries. So again, as we go through this course, I want you to keep this phrase in mind. Trading is a workflow. So the keys to a good trading system, guys, are acting and not reacting. Most setups, again, they force you to react. Something happens, or something is happening, and you feel like you need to react to it. In most scenarios and in most setups, you're already losing at that point, even if you haven't even gotten into the trade, because again, there's no workflow to get you there. You know, every day trader that I've spoken to, guys, has the same problem. They spend the whole session waiting for a setup, right? And then they react to it once it appears. The signal triggers, they enter, the move happens, they decide whether or not to exit and where to exit when they're already in the trade. Again, this is reactive. We can't be proactive in trading necessarily. We can't get into a trade before a move has occurred, unless we want to be way too early and get whipped around. But again, when we have setups, when we have certain playbooks, which this system has, all we need to do is follow the steps. There's still work to be done. There's on us to assess whether a pattern is valid or not. The indicator will do that for you, but whether or not we take it based on our risk tolerance, where it is on the overall charts. Guys, there's no magic tool and no magic indicator that saves you from having to do higher time frame analysis. I personally trade the StackTrade system on the 1 minute, but I'm always going to know where we are in relation to the 1 hour chart, and occasionally the 4 hour chart if we're moving quite a bit as well. Okay, so we're not going to get deep into that in this course. I highly encourage you to check out anything by Steve Nison, Nison, when it comes to candlesticks, because for me, when I have an hourly chart on my screen, I do not have any indicators. It's pure other than swing high and swing lows. It is pure candlestick patterns and how we react at certain levels of support and resistance on the chart. So But again, guys, we want to act when we see something about to happen and prepare to act. We don't want to react once something has already happened. And I know that's a fine line. We have to see the pattern before we get into the trade, but we should be ready to see that pattern. And the more you trade a system, and especially when the more you trade StackTrade, you're going to recognize these moves before the indicator even paints right there on your screen. So before the indicator paints, you've already planned your entry, you've planned your stop, you've planned your first and second profit targets, or full profit target if you want to exit all at once. That work is already done based on the analysis that you've done on the chart, guys. Okay. So guys, this is the StackTrade system. What is the StackTrade system? So the StackTrade is a structural day trading system designed specifically for futures. Now, I do want to say the principles of what we're going to cover can translate to a lot of different asset classes. But being as that I've never tested this in those other asset classes like stocks or options or Forex, etc., I'm not going to sit here and tell you that this system will definitively work for those. The principles will be the same, and you're welcome to adapt some of these principles to other things that you do. But for this course, we're specifically talking about futures, and more specifically, day trading futures. This is one indicator. It's 3 nested time frames, which means we're looking at 3 time frames at once, the same indicator on 3 time frames that will paint right there on your 1 minute or 5 minute chart, and will give you the levels that you need. The core promise is that the key levels are known in advance, guys. Sometimes our daily levels are known before we even sit down to our computer in the morning and boot up our trading programs. Those are painted at 6 p.m. Eastern every single day. They do not change during the day. The hourly will reset at the top of every hour, the 15-minute every 15-minute. So you're not always going to get an hour's notice for a potential setup, but anyone who's struggled in day trading understands even having a 3 to 5 minute notice of where key levels are going to stack up on a chart knows how valuable that is. And guys, most importantly, nothing here requires prior knowledge of the underlying methodology. We're basically kind of starting from zero, and nothing that you see is complex, guys. And here's one of the great secrets of trading, right? I'm sure you've seen a lot of YouTube videos or TikToks or anything. This is the secret of trading, all of this. And usually it's just a bunch of bullshit to send you to the next video or the next video or whatever. But I'm going to tell you one of the real secrets of trading from somebody who's been around for 15 years, guys. When trading is at its best, it's very simple. Never easy. Don't confuse those words. Trading is never easy. And guys, after 15 years, I can't honestly sit here and tell you it's gotten a whole lot easier. I'm just better at managing my emotions and understanding what particular setups, patterns, and like StackTrade systems that work for me. But when trading is at its best, it is simple. Entry here, exit here, stop loss here, etc., etc. So just kind of keep that in mind as we go further on. So guys, this is based on the rotation principle. Frank Delernia, among others, many others, has commented on this principle quite a bit. So it's that the markets spend the majority of their time rotating between support and resistance rather than trending, roughly 2/3 of all session. Now, this doesn't mean, and especially as I sit here recording this in the summer of 2026, guys, we've had a lot of chaos in the markets from the Iran situation. We've been headline driven. And let me tell you, over the past few months, this system has continued to work despite all of this. So when you say, well, the markets, Matt, they're always trending. Look, we're making new all-time highs on a daily or weekly level or no new short-term lows today, yesterday. That's not saying we can't do that. But what this is saying is intraday, we're going to spend the majority of our time rotating between key levels of support and resistance. Now, the system defines the rotation boundaries in advance, whether 15 minutes, 1 hour, or a day, and then trades price moving from the extremes back towards the middle. Okay, so that's a key. Is you'll see every time frame is going to have the high of the time frame, the low of the time frame, and the mid of the time frame. And these are projections. These are not, hey, why is this high? The markets haven't gone there in a week. Why are you saying this is the range high? Well, the range high is extrapolated off the mid using a couple of different formulas, ATR, etc. And those are basically projections of where we can go, not where we will go. And so within those ranges, we are looking for price to move from the extremes back towards the middle. Now, when a market is trending or breaking out, the system has specific setups for those conditions as well that identifies the direction rather than assuming it. Okay, so this will make a little more sense as you see this on the charts and you see this in action. But guys, that's basically the long and the short of what we're looking for with that. Long and short, you get a little trader humor there. So there's 3 levels and 3 time periods here, guys. We are looking for our daily, our hourly, and our 15-minute. Now, we've got our channel high or range high. You're going to hear it referred to as both, which is the upper boundary. Now, when price reaches it, the market has stretched to the top of its recent range, or what we're projecting is the top of its short-term range, or range within that particular time period, whether daily, hourly, or 15 minutes. So this is resistance. Then we have the 50% level, the mid level, right? You're going to hear me refer to hourly mid, daily mid, etc. And this is the single most important line on the chart, guys, and especially the daily mid, because it defines our bias. It in advance is going to tell us, are we predominantly looking for shorts, or are we predominantly looking for longs? In general, and especially when you're starting in the system, for the most part, you're not going to go long below the daily mid, and you're not going to go short above it. You can, and as you get better in the system, you can do that a little more often. And I'll show you how to filter the indicator to only show you longs above the mid and shorts below the mid. But even myself, who's been trading this system pretty much every trading day for 3+ years now, if I'm going to take a long above the mid or a short below, I'm only going to be, or excuse me, a short above or a long below, I'm only going to be half position size. Okay, so just some of the basic parameters of this system is where we're going forward. So we're also going to have the channel low, the lower boundary, which is support. The standard day trade, and guys, this is oversimplifying. You're going to see this in a little more example later, but sell at the high, target the mid, stop outside the high, buy the low, target the mid, stop below. Mechanical entry, mechanical exit, define risk. Now, the entries in this system are static. They do not change as far as how you manage the trade, because we're all coming from a lot of different levels of experience. Some of us are trading our own brokerage accounts. Some of us are trading prop firm accounts. Where you exit, how much you're willing to risk, and how far you're willing to let a trade go. Yes, position size is a big part of that. We'll talk about that as well. But you need to be mindful of your personal trade target. So for example, if you're taking a long, all right, and you only need $500 to get to qualify for a payout or pass your eval as a prop firm, it's okay to take the trade off when you've hit that particular point, especially if you're passing an eval. It doesn't do you any good to go another $500 higher. You've passed the eval, and if there's consistency involved, you want to go ahead and close that trade out and get that funded account going, right? In a personal brokerage account, you may let part or all of the trade run a little further, depending on, again, personal risk tolerance, personal risk management, et cetera, et cetera. So guys, this is the very basics of the structure of the system. In the next video, we're going to go into my trading view chart. We're going to put the indicator on the chart. I'm going to show you the various customization tools for the indicator, and we're going to talk about the principles of the price action within that time as well. So I will see you over in video number 2.